Good morning, all of you. So, in last lecture, we have started the introduction part of accounting standard. We have seen what is the meaning of GAAP. What is the full form of GAAP? Please write down in chat box. GAAP. Then accounting standards, international accounting standards, IFRS, and Ind AS. How Ind AS came. Okay. Anyone can tell me GAAP full form? Generally accepted accounting principles. Krutik Devans, right answer. So, we have seen meaning of accounting standards, benefits of accounting standards, okay? Recognition, measurement, presentation, and disclosure. I think we are in second point. Requirements for additional disclosure. There are certain areas where information is not statutorily required to be disclosed. It's not necessary to disclose all the things in financial accounts, but we mention some additional disclosures. So why? What is the requirement of that additional disclosure? However, accounting standards may call for appropriate disclosures in accounting policies followed and other required information in financial statements, which would be helpful for readers to understand the accounting treatment done for various items in those financial statement. What will be the treatment of various transactions? Okay, that will be understood by additional disclosures. So the additional disclosures are important. Third one, comparability of financial statement. Comparison. In addition to improving the credibility of accounting data, standardization of accounting procedures improves comparability of financial statements, both intra-enterprise and inter-enterprise. Now, what is the meaning of intra-enterprise and inter-enterprise? For example, let's say Reliance. Reliance Industries is situated in Jamnagar. Okay, and let's say one branch is in Mumbai also. So there will be two operational buildings. One is in Jamnagar and another one is in Mumbai. Now comparison of both the financial statements will be helpful because of the accounting standards only. Okay, because both the companies, both the branches of Reliance, Jamnagar and Mumbai are following the same standards. So it will be easy to identify the benefits or the pros and cons of both the companies, which will be more worthy. Okay, it will be helpful by comparison of financial statements. Now, these both branches will be considered as intra-enterprise. Why? Because within enterprise, intra-enterprise means within enterprise. Okay, both are the Reliance Industries, but we are comparing both. Why? To identify which is best. Now, Reliance Industries and Tata Industries. Now, these are inter-enterprise. This is the example of inter-enterprise. Why? Because both are in same industry, but both enterprise are different. Reliance and Tata. Okay, so comparison can be done between Reliance and Tata. So it will be helpful if both the companies are following the same accounting standards. Such comparisons are very effective and most widely used tools for assessment of enterprise financial health and performance by users of financial statements for taking economic decisions. For example, whether or not to invest, whether or not to lend, and so on. Okay. As an investor, I will obviously check whether I should go for Reliance or Tata or Wipro or Infosys. So I can compare the financial statements of all these four companies, and then I can take my decision whether to go for Reliance or not, or whether to go for Infosys or not. The intra-enterprise comparison involves comparison of financial statements of same enterprise over a number of years. Over a number of years means comparison of 2018 with 2019, 2019 with 2020, 2020 with recent year 2021. Okay, so this comparison will be possible by AS. It is also intra-enterprise. Okay, Jamnagar branch, Reliance Industries. Net profit of 2020 is 5,000 crore. Net profit of 2021 is 10,000 crore. Okay, it is almost double. Okay, but it's not like we have to compare the sales also. In last year, sales was 10,000 crore, and in this year, sales was 21,000 crore. So it is more than double. So if your sales is more than double, but your net profit is only double the previous figure, so this is how it will be compared. Okay, so it is below standard. This is how it will be compared. Clear? Intra-enterprise comparison involves the comparison. Okay, the intra-enterprise comparison is possible if the enterprise uses the same accounting policies. That's what I have said. Every year in drawing up its financial statements, the inter-enterprise comparison involves comparison of financial statements of different enterprise for same accounting year, for same accounting period. This is possible only when comparable enterprises use similar accounting policies in preparation of respective financial statements. The disclosure of accounting policies allows a user to make appropriate adjustments while comparing the financial statements of comparable enterprises. Okay, clear? Now this is for the reading purpose only. How standards set, the process of standard. It can't be asked how many accounting standards are there. Now this is the most IMP part. How many accounting standards are there? So there were so many accounting standards previously. Now some of the accounting standards has been withdrawn by the ICAI. Okay, so there are now around 27 accounting standards. Okay, so let's discuss. First of all, the Institute of Chartered Accountants of India, ICAI, has so far issued 29 accounting standards. However, AS6, Accounting Standard 6, depreciation accounting, has been withdrawn on revision of AS10. So AS10 is revised, property, plant, equipment, and AS6 was withdrawn. Then AS8, accounting on research and development, has been withdrawn consequent to the issuance of AS26. AS26 is related with intangible assets. Thus, effectively, there are 27 accounting standards at present. At present, there are 27 accounting standards. The accounting standards issued by Accounting Standard Board, ASB, Accounting Standard Board. Accounting standard is issued by whom? ASB. So it can be asked in MCQ that accounting standard is issued by dash. There will be 4 options, and among them one will be ASB. So you have to take that. Accounting Standard Board. Establish standards which have to be complied with the business entities so that the financial statements are prepared in accordance with GAAP, generally accepted accounting principles. In recent times, there are various improvements or developments in global accounting standards which have taken place. And in India, Ind AS have become mandatory for certain class of companies as per MCA roadmap. In first lecture of AAS, we have discussed this. To meet the global requirement in India, Ind AS came into existence. Do you remember, class? This is what we have discussed. Ind AS have become mandatory for certain class of companies as per MCA roadmap. MCA means Ministry of Corporate Affairs. Ministry of Corporate Affairs. AS, accounting standard, being the guidelines to prepare financial statements, have to keep pace with these changes in global accounting scenarios. Number of fundamental changes have been made in these accounting standards so as to globally aligned as far as possible. So globally बिजनेस करने के लिए जो भी चेंजेस करने पड़ते हैं उसे the AS should be improved time to time to accept the global changes. Okay. Now, MCA wide notification date 30th March 2016 announced Companies Amendment Rules 2016. Companies Accounting Standard Amendment Rules 2016. Various AS, that is 2, 4, 10, 13, 14, 21 and 29 were revised. All these standards were revised in Companies Amendment Rules 2016. Write this notification to make them in line with the corresponding Ind AS. So it should be in line with corresponding Ind AS. Why? Because Ind AS is not followed by all the companies. Here, it is given that it is mandatory for certain class of companies only. Which type of companies, that we will discuss later. Which type of companies have to follow Ind AS. Okay. So some of the companies are still following AS, accounting standards. So we have to revise the accounting standards also. So that's why AS 2, 4, 10, 13, 14, 21, 29 were revised. Now, this is the list of accounting standards. So we are supposed to remember this list. So the answer is yes. You have to remember all these accounting standards. This is most important part, okay? In IPCC also and in your semester 3 also. Sir, we are supposed to remember the date of applicability. Answer is no. It's not mandatory. Okay? If you can remember this, then that is well and good. But it's not compulsory. You have to remember the name only, the titles only. Okay? Up to AS 29. Now, for IPCC student, AS1, AS2, AS3, 10, 11, 12 and 13 are covered in syllabus of this paper. So if you are preparing for IPCC group 1, then you have to recognize this AS only. Okay? But if you are planning for both group IPCC, then you have to remember all these accounting standards. Okay? So, તમને ખ્યાલ આવી ગયો કે rest of the accounting standards which are not listed over here will be covered in 5th paper, advanced accounting. Okay, I think one of you, Amrut, I think, will be in IPCC. Who is in IPCC? Yes or no? Am I right or not? Okay. So if you are planning for group 1 only, then you have to remember these accounting standards. But if you are planning for both group, then you have to remember the full module. Now, sir, you have given the idea of IPCC. What about semester 3? So here it is. Unit 1, background of accounting standard. That's what we are learning right now. Formulation of accounting standards, Ind AS, IFRS, convergence, adoption and carve-outs, applicability of accounting standards, concept and guidance notes. Then AS 1, 2, 3, 4 and 5. In your unit number 1, there are 5 accounting standards, 1 to 5. In unit number 2, there are accounting standards 7, 9, 10, 11, 12, 13, 16 and 17. And the last unit, third module, there will be AS 14, 18, 19, 20, 22, 24, 26 and 29. So these are the accounting standards you have to remember. You have to study. Clear to all of you? Class? Hello, please reply. I want reply from all of you. Okay, 1, 2, 3, 4, 5, 6. Okay. Now, need for convergence towards the global standards. We have studied this, but let's read one more time. The last decade has witnessed a sea change in the global economic scenario. Sir, sea change means gigantic change in global economic scenario. The emergence of transnational corporations in search of money, not only for fueling growth, but to sustain ongoing activities has necessitated raising of capital from all parts of the world, cutting across the frontiers. So it's necessary not only in search of money, not only in search of growth, but all the aspects. Okay, each country has its own set of rules and regulations for accounting and financial reporting. Therefore, when an enterprise decides to raise capital from markets other than the country in which it is located, the rules and regulations of that other country will apply, and this in turn will require that the enterprise is in position to understand the differences between the rules governing financial reporting in foreign country as compared to its own country of origin. Now we have discussed that, for example, if Reliance Limited India wants to raise fund from foreign country, or if Reliance Limited wants to invest in foreign country, foreign companies, then Reliance must know the financial position of that company, or other companies should know the position of Reliance. So if both the companies are following similar accounting standards, then it will be very helpful for both the companies. It will be very easy for both the companies. Therefore, translation and reinstallments are of utmost importance in the world that is rapidly globalizing in all the ways. Further, the accounting standards and principles need to be robust so that the larger society develops the degree of confidence in the financial statements which are put forward by organizations. So that's why we have to change according to the global position. International analysts and investors would like to compare financial statement based on similar AS, and this has led to growing need for an internationally accepted set of accounting standards for cross-border filings. Cross-border filing means invest in another company, accept investments from other companies. Okay, the harmonization of financial reporting around the world will help to raise confidence of investors generally in the information they are using to make their decisions and assess their risks. Okay, so if 4 marks or 8 marks questions will be asked, that what are the need to change, to move towards the global, what are the need for convergence towards the global standards, so you have to write down these paras. Okay, also a strong need was felt by legislation, government, to bring about the uniformity, rationalization, comparability, transparency, and adaptability in financial statements. Having a multiplicity of types of accounting standards around the world is against the public interest. Multiplicity type of accounts means America is following another accounting standards, UK is following another set of accounting standards, India is following another accounting standards. So these multiplicity types of accounting standards around the world is against the public interest. Is against the public interest. So 1 mark question can be asked whether it is true or not, whether following statement is true or not. Having multiplicity of types of accounting standards around the world is against the public interest, whether the following statement is true or false. So obviously true. Multiplicity types of accounts are not acceptable. So if accounting for the same events and information produces different reporting numbers depending on the situation of standards that are being used, then it is self-evident that accounting will be increasingly discredited in the eyes of those using the numbers. In the eyes of those using the numbers. Do you know the concept of cash system and mercantile system? What is the meaning of cash system and mercantile system? Class? Class? Jago? Do you know the concept of cash and mercantile? Okay. Yes. Yes. Mercantile means accrual basis or cash basis. Cash basis means whenever cash inflow or outflow will be there, then and then only it will be recorded. And mercantile system means you will record the transactions whenever the contract is done or whenever the transaction is done. For example, I have ordered 5 lakh rupees of goods from Mr. B. So I have booked the transaction. I received the bill on 21st February, let's say March 2021. So I have received the bill, but I haven't paid. I haven't paid anything. Sorry, sales. I told you sales. Product, but I haven't received the money from that person. So my products will gone from my row house, but I haven't received the money. So in mercantile system, I will record the sales. I will record the sales. But if I am following cash basis, then I will not record that. Why? Because I haven't received anything. Whenever I receive, for example, I receive that money on 15th April 2021. So I will receive the transaction on 15th April. This is what cash system. So if I am following mercantile system, that sales will be reflected in my financial year FY 2021. But if I am following mercantile cash system, then it will be reflected in my financial accounts of FY 21-22. Okay. Similarly, if one country is following mercantile system and another company is following cash system, then you cannot find, it will create confusion, encourage error, and may facilitate fraud. The cure of these ills is to have single set of global standards. That's why the need of single set of global standards arise, okay, of the highest quality, sets in the interest of public. Global standards facilitate cross-border flow of money, global listing in different stock markets, and comparability of financial statement. That's why the convergence is required. Clear now? The convergence of financial reporting and AS is a valuable process that contributes to the free flow of global investments and achieves substantial benefits for all the capital market stakeholders. It improves the ability of investors to compare investments on a global basis and thus lower the risk of errors of judgment. It facilitates accounting and reporting of companies with global operations and eliminates some costly requirements like reinstatement of financial statement and so on. Okay. Now, remember our first lecture, I have written down IASB, International Accounting Standard Board. In India, we are following ASB, Accounting Standard Board. But for international level, it is IASB, International Accounting Standard Board. In India, accounting standard is issued by ASB. But in various countries other than India, it will be followed. The accounting standards will be given by IASB, International Accounting Standard Board. So first of all, I want reply from all of you. Are you getting this or not? Reply quickly. Okay. Now, IASB. With a view to achieving the objective of setting global standards, the London-based group, namely IASC, International Accounting Standards Committee, responsible for developing IAS, International Accounting Standards, was established in June 1973. It is presently known as IASB. This is for reading purpose, okay? No one will ask you what is the IASB, IASC. The IASC comprises the professional accountancy bodies over 75 countries, including ICAI. Primarily, the IASC was established in the public interest to formulate and publish IAS, International Accounting Standards, to be followed in preparation and presentation of financial statements. International accounting standards were issued to promote acceptance and observance of IAS worldwide. The members of IASC undertook a responsibility to support the standards developed by IASC. Okay, to propagate those standards in their respective countries. Okay, this is the basic idea how it come. Between 1973 to 2001, the IASC released International Accounting Standards. Between 1997 to 1999, the IASC restructured their organization, which resulted in formation of IASB, International Accounting Standard Board. These changes came into effect on 1st April 2001. Subsequently, IASB issued statements about the current and future standards. IASB publishes its standards in a series of pronouncements called IFRS. Now, that body, IASB, has given a series of International Financial Reporting Standards, has given the series named as IFRS. However, IASB hasn't rejected the standards used by IASC, that is, International Accounting Standards. The standards issued by IASC till 31st March 2001 are known as IAS, and the standards issued by IASB since 1st April 2001 are known as IFRS, the new set of standards. Now, IFRS. This is the most IMP IFRS. You have to follow now IFRS at a global level. And in India, the IFRS version is Ind AS. Okay, IFRS convergence in Ind AS. It is converged into Ind AS. Now, IFRS issued by IASB interpretations on IAS, International Accounting Standards, and IFRS issued by IFRS Interpretation Committee, IAS issued by IASC and adopted by IASB, interpretation on IAS issued by SIC, Standard Interpretations Committee, SIC. Okay, so interpreters, obviously the standards is changed. Standards are changed, then it should have been interpreted. Now, the term IFRS comprises IFRS issued by IASB, IAS issued by IASC, interpretations issued by Standard Interpretations Committee, and the IFRS Interpretations Committee of IASB. IFRS are considered as principles-based set of standards. Principles-based set of standards. Okay, this is important line. One mark questions can be asked. IFRS are considered as principle-based set of standards. In fact, they establish broad rules rather than dictating specific treatments. Okay, so IFRS focuses on broad rules not dictating the specific treatments. What will be treatment of this transaction and that transactions? No, they establish broad rules. Every major nation is moving towards adopting them to some extent. Larger number of authorities permits public companies to use RFRS for stock exchange listing purposes. And in addition, banks, insurance companies, stock exchange may use them for their statutorily required reports. So now all of the banking units, insurance units of all the countries, majority of countries have started following IFRS. So over the next few years, number of companies will adopt international standards. This requirement will affect thousands of enterprises, including their subsidiaries, equity investors, joint venture partners. Obviously, all this will be affected. Why? Because earlier they were following accounting standards, now they have to follow Ind AS. So all these subsidiaries, equity investors, joint venture partners will be affected. The increased use of RFRS is not limited to public companies listing requirements or statutory reporting. Many lenders and regulatory and government bodies are looking to IFRS to fulfill the local financial reporting obligations relating to financing or licensing. Okay. Now, this is all about how we have converged. The IFRS and implemented or introduced Ind AS. How we have implemented Ind AS. Every country can become IFRS compliant either by adoption process or conversion process. In last lecture, Excel sheet, I have written either you can adopt or you can converge. Do you remember that or not? Class, the same thing came. Either you can adopt the process or you can converge. What India decided? Class, what India decided? Whether to adopt or to converge? Very good. So India decided to converge. Okay. India જલ્દી કોપી ન કરે કાઈ. એમ ઇન્ફ્લુઅન્સમાં પણ ના આવી જાય કે ઓકે ચલો બહુ સરસ છે ચલો બેઠે બેઠો લઈ લ્યો. It's not like that. So adoption would mean that the country sets a specific timetable when specific entities would be required to use IFRS as issued by IASB. And convergence means that the country will develop high quality compatible accounting standards, and there would be alignment of that standards of different standard setters with certain rates of compromise by adopting the requirements of standards either fully or partially. Ind AS are almost similar to IFRS, but with few carve-outs. Carve-out means exclusions, so as to make them suitable for Indian government. Okay. So that's why India hasn't adopted the IFRS, but converged with some carve-outs, with few carve-outs, so as to make them suitable for Indian environment. Now convergence with IFRS will result in following benefits. So what will be the benefit? What are the benefits of converting that IFRS into Ind AS? Not convert, but converge. Improving investor confidence across the world with transparency and comparability. Obviously, now if Reliance is following IFRS based Ind AS, then all the companies in all over the world will look after for Reliance. Why? Because they are following IFRS based Ind AS. So it will affect the transparency. It will result into the transparent environment and comparability. Improves inter-unit, inter-firm, inter-industry comparison. obviously comparison will be easy. Why? Because both the companies are following same set of standards. Group consolidation will be easy. Consolidation means merge. Merge. What to be merged? Merge the accounts. Like my branch A, branch B, and branch C. One company has 3 branches, A, B, and C. All these companies are following different accounting standards. So consolidation cannot be happen. It will be done by following one set of standards only. So it will be easy. Consolidation will be easy. Now, acceptability of account financial statements by stock exchange across the globe, which have facilitated listing of Indian companies. Now, for example, Reliance or Infosys wants to be listed in international stock exchange. Okay, Nasdaq, or there are so many stock exchanges out there. Okay, Dow Jones. Okay, so for example, Infosys wants to list in that international standards, international stock exchange. So they have to follow IFRS based Ind AS. Otherwise, they cannot recognize Infosys in international stock exchange. Okay. Now, this is what we have discussed: cross-border money, flow of money, and so on. Okay. Now, what are the carve-outs or carve-ins in Ind AS? Now, how Ind AS is different from IFRS? Okay. 11:45. I think your session will be ended at 11:45. Yes. So we have 6 minutes. So let's discuss one by one. The government of India, in consultation with the ICAI, decided to converge or not to adopt IFRS issued by IASB. I have told you in last lecture. Government asked ICAI, said, should we adopt the IFRS or should we converge? So ICAI said, sir, we will converge it, not adopt. Okay, give us some time. We will form the set of standards that will be converged from IFRS. All you know that accounting standards is issued by ASB, and ASB is one of the board of ICAI. Okay, તો accounting standard ICAI આપ્યા હોય તો Ind AS પણ ICAI જ આપશે. So a decision of convergence rather than adoption was taken after the detailed analysis of IFRS requirements and extensive discussion with various stakeholders. Stakeholders includes all the people like debtors, creditors, shareholders, investors, BOD, directors, okay, analysts. All these will be included in the category of stakeholders. It is not shareholders, stakeholders. Stakeholder is broader term. Accordingly, while formulating Ind AS, efforts have been made to keep these standards as far as possible in line with corresponding IAS, IFRS, and departures have been made where considered absolutely essential. These changes have been made considering various facts such as, so let's discuss one by one what is the carve-ins and carve-outs. Various terminology related changes have been made to make it consistent with the terminology used in law. For example, statement of P&L, statement of profit and loss in place of statement of comprehensive income. So in UK, it is statement of comprehensive income. Let's say if one of the students in this class has to visit UK and he will be finance manager over there and he check the accounts. He say, let me check the accounts first. Then you figure out that where is statement of profit and loss account. You will not find statement of profit and loss account over there. Why? Because in UK there will be statement of comprehensive income. There is statement of comprehensive income, and there will not be balance sheet, but there will be statement of financial position. આપણે અહીંયા P&L and balance sheet હોય, but in UK means in IFRS it is statement of comprehensive income and statement of financial position. So we converged and we changed the name. Why? Because we were following this set of names. Okay, so we continue with that name only. Okay, we haven't accepted the names. So set of comprehensive income, no, in place of that particular name, statement of P&L, and balance sheet in place of statement of financial position. Then removal of options in accounting principles and practices, and Ind AS vis-a-vis IFRS have been made to maintain consistency and comparability of the financial statements to be prepared by following Ind AS. Removal of options in accounting principles and practices. These changes will not result into carve-outs. It is not the main change. Okay, so it will not result in carve-outs. Certain changes have been made considering the economic environment of the country, which is different as compared to the economic environment presumed to be in existence by IFRS. These differences are due to differences in economic conditions prevailing in India. So economic condition in India is different than rest of the countries, obviously. So that's why there will be a need of carve-in and carve-out. These differences, which are in deviation to the accounting principles and practices stated in IFRS, are commonly known as carve-outs. And additional guidance given in Ind AS over and above the IFRS will be considered as carve-in. So any additional data in addition to IFRS is carve-in, and any differences or deviation to the IFRS will be carve-out. Okay, so in next lecture we will discuss from this chart, okay, convergence to the IFRS in India. Okay, so that's all for today. I think next lecture is mine only, so we will meet after 5 minutes. All of you are requested to write down the enrollment number. I will send the new link in WhatsApp group. Okay, thank you all of you.
Sir,
Yes.
Sir, I'm really sorry I couldn't answer you. I found out later that you asked me a question. I have been having network issues since morning, so I couldn't hear the question.
No issue. No issue. Okay.